Imagine a company, maybe not a household name for everyone, but it's so central to our modern world. It probably made the brain in, well, whatever device you're listening on right now.
Right, your phone, the cloud servers, the AI.
Exactly. It's this quiet, kind of indispensable giant
Yeah.
behind so much of today's tech.
Mm-hmm.
So today we're doing a deep dive into that company, Taiwan Semiconductor Manufacturing Company, or TSMC, a real titan.
Yeah, absolutely. And our guide for this deep dive is a pretty comprehensive market and financial analysis report. It's updated right up to September 3, 2025.
Fresh data then.
Yeah, really fresh. And it's not just, skimming the surface. It pulls together all the public historical data, blends it with what the consensus of analysts are forecasting,
Okay.
and even gives illustrative forward-looking projections. So it paints a really complete picture of TSMC, where it stands, where it might be going.
And you mentioned a rating system.
Ugh. Yes. The report uses a simple star rating. Pretty straightforward. 5 stars is top-notch. Excellent. 1 star means maybe some concerns there. It just gives you a quick way to gauge performance as we go.
Good shorthand.
Exactly. So our mission for you, listening in, is basically to give you a shortcut to being really well informed about this, frankly, crucial company.
Right.
We're going to break down its growth, its profitability, which is pretty impressive, its financial health, how the market sees it, how analysts see it, especially with everything going on globally right now.
Okay, let's unpack this then. Let's start with that growth, TSMC's growth story. We'll look back first, right? The last 5 fiscal years.
Yeah, FY 2020 through FY 2024. And then we'll look at what analysts are projecting for the next 3, FY 2025 to 27.
Okay. So looking back, that history, the numbers really do tell a story, don't they?
They really do.
Revenue climbing, what, over 20% a year on average? That gets a 4-star rating, which is strong.
Very strong. But look how that translated to profit.
Yeah, that's what jumps out. EBIT, net income, both growing over 30% per year. That's 5 stars. Excellent.
And EPS, earnings per share, also 5 stars, growing around 28.5% annually.
But the real standout, you mentioned free cash flow. Nearly 68% annual growth over 5 years.
Yeah, 67.8% average EOI. That's pretty remarkable. 5 stars again. So overall, historical growth gets a solid U rating, good positive.
Okay, so historically strong. And analysts think this kind of momentum keeps going.
Right, yeah, that's the compelling part. The forecast suggests these strong trends are set to continue.
Right.
For the next 3 years, they're projecting average annual growth around 19.2% for key things like revenue, EBIT, EBITDA, free cash flow, book value. Those all get 4-star ratings.
Still very solid growth projected.
Very solid. And then net income and EPS, those core profitability metrics for shareholders, they're expected to maintain even stronger growth, forecast at nearly 26% annually.
Wow. Okay, so that's a 5-star forecast for those.
Exactly. So the overall weighted growth rating, combining historical and forecast, comes out to Akithrui, good positive, with a numerical score of 4.34 in the report.
Impressive consistency.
What's fascinating here, though, it's not just numbers on a page, right? This isn't random.
No.
This sustained, powerful growth is really driven by TSMC's leadership. They're just dominant in advanced semiconductor manufacturing. The report points directly to, and I quote, the secular demand for AI and high-performance computing chips as the main engine here.
Right. Secular meaning long-term, not just a blip.
Precisely. Think about the whole AI revolution, the complexity of the gadgets you use every single day. TSMC is right there powering it. For you, the listener, this growth shows just how integral TSMC is to that future. They're essentially, building the brains for what comes next.
Okay, so establish it's a growth machine. But growth is one thing, making money from that growth is another. How profitable are they really?
Ah, yes, the profitability quotient.
How does TSMC turn that top-line growth into actual profit? Let's dive into the margins, the returns, same period, FY 2020 to 2024.
And this is where it gets really interesting, I think.
The report shows they're not just growing, they're doing it with, well, world-class efficiency.
Absolutely. Look at the gross profit margin. Averaged 55% over those 5 years.
55%, consistently above 50%. That's huge.
It is. And operating profit margin averaging 46%. Net profit margin, what they actually keep after everything, averaged almost 40%. These are just stellar numbers.
Incredible, especially for manufacturing, which usually has tighter margins.
Exactly, and particularly one this capital intensive. We're talking Undwarhobring, excellent across the board for those margins.
And what about returns? Like, how well do they use the money invested in the company?
Also very strong. Return on equity, ROE, averaged 31%. It's another 5-star, excellent rating. shows very efficient use of shareholder capital. Return on assets, ROA, is strong at 13.4%. That's 4 stars, which is healthy given their massive asset base, all those factories.
Right, the fabs.
Yeah. And return on invested capital, ROIC, averaged 17.1%, another strong 4-star rating, consistently earning way above their cost of capital.
So profitability overall.
Near perfect.
Yeah.
The overall weighted profitability rating is only excellent, with a numerical score of 4.75, just top-tier performance.
Wow.
And if we connect this to the bigger picture, what does it mean?
Yeah.
These amazing margins, these high returns, they really highlight TSMC's significant pricing power.
Yeah.
They can charge what they need to. It confirms they have what analysts call a wide economic moat.
Meaning strong competitive advantages.
Exactly. Sustainable advantages that protect their profits. And that's crucial, absolutely crucial, in an industry where just building one new advanced fab costs billions and billions of dollars.
They have something others can't easily replicate.
Precisely. Their tech and manufacturing capabilities are just incredibly hard to match. So for you, the listener, it means TSMC isn't just growing fast, it's doing it powerfully and efficiently. They command value because they're indispensable. It's a sign of true dominance.
Okay, so incredible growth, incredible profitability. But what about the foundation? How secure is the company financially?
Good question. Because they do spend enormous amounts of money.
Right, all that CapEx for new fabs and R&D. So what does the balance sheet look like? Again, looking back, FY20 to FY24, the report calls it a fortress balance sheet.
And yeah, that seems pretty accurate. When you look at liquidity, their ability to cover short-term bills, they're just loaded with cash and accessible assets. The current ratio, the quick ratio, even the cash ratio, all averaged well above healthy levels. We're talking 5 stars. Excellent across the board there.
So plenty of cushion for short-term needs.
Loads of cushion. It's like having a massive emergency fund. Then you look at their long-term debt, their solvency.
How leveraged are they?
Very conservatively managed. Debt to equity averaged just 0.28. That's another 5-star excellent rating. Very low leverage.
Sure.
And their ability to cover interest payments, get this, averaged 145 times over.
145.
Yeah, 145x. It means their solvency risk is practically negligible. 5 stars again.
Incredible safety margin there.
Absolutely.
Oh.
And finally, cash flow adequacy. How well does their cash generation cover their debt and spending?
Right.
Again, outstanding. Cash flow from operations relative to total debt is super strong. 1.70x average, 5 stars. Even free cash flow, after all that massive capital spending, still covers total debt at a healthy 0.59x average. That's 4 stars strong.
And they still pay dividends.
They do. The payout ratio averaged 38%, which gets a good 4-star rating. It's well covered, meaning they can return cash to shareholders and still reinvest heavily in the business.
Makes sense. So overall financial strength.
It's phenomenal. 5 stars. Conchurston,
Excellent.
with a numerical score of 4.80. Truly a fortress.
So that financial strength must be a huge advantage in itself.
Oh, absolutely. It's profound. It's what allows TSMC to fund those gigantic CapEx budgets, the billions for new fabs, for staying ahead technologically without needing to borrow heavily or constantly issue new stock.
They can fund their own future, basically.
Exactly. They have the internal resources to lead while still rewarding shareholders. For you, the listener, just imagine running a business that needs billions constantly just to stay competitive.
Yeah, intense pressure.
Right. TSMC's financial health gives them the flexibility, the resilience, the deep pockets to navigate that. It secures their dominance. It's not just good accounting, it's strategic power.
Okay, the company's internal picture looks incredibly strong. Growth, profits, financial health, all top-notch. But what about the outside view? How did the professional analysts see TSMC?
Right, the sell-side experts. Let's look at their sentiment again as of September 3, 2025.
And the report shows, well, it's interesting. A bit nuanced, maybe.
A little bit, yeah. The headline is the consensus recommendation. It's a strong buy. That's a clear 5-star rating. Very positive overall signal.
Okay, strong buy. What about the details? Estimate revisions.
So looking ahead to fiscal year 2026 estimates, earnings per share, EPS, looks good. There were 9 upward revisions recently versus only 1 downward. That's positive momentum, a 4-star rating.
Confidence in their earnings power, then.
Seems like it. But then revenue estimates for that same year, the picture's a bit different.
How so?
Well, there were 10 upward revisions, but actually 21 downward revisions. So a net negative trend there. That only gets a 2-star rating.
Interesting. So more bullish on profits than on revenue growth.
That's what it suggests, yeah. Probably analysts factoring in broader macro concern, maybe a slowing economy affecting overall demand, even if TSMC keeps its share and margins.
Okay. What about price targets?
Still looks pretty positive. The current price cited is around $231. The consensus target is about $260.
So roughly 12.5% upside implied.
Roughly, yeah. And the targets range from $240 up to $306. So analysts see potential there. That gets a 4-star rating.
And their track record on surprising analysts.
Excellent. TSMC beat EPS estimates in each of the last 4 reported quarters. Average surprise was almost 6%. Another 5-star rating there.
Okay, so putting it all together, analyst sentiment is...
It's rated Ogyud positive with a numerical score of 3.90. So overwhelmingly positive, but with that slight caution flag on near-term revenue forecasts.
Right. That revenue revision point is intriguing, though.
It really is. It raises this important question. You've got caution on revenue, maybe due to macro stuff, but analysts are still revising earnings estimates upwards.
Yeah. What does that tell us?
It suggests they have really strong belief in TSMC's fundamental strengths, its margins, its pricing power, its long-term earnings capability. They seem confident the company can stay highly profitable, even if the top-line growth faces, some temporary headwinds.
So even with potential bumps in revenue, the core profitability is expected to hold up well.
Exactly. So for you listening, when analysts are still enthusiastic about earnings and price potential, despite some revenue concerns, well, it speaks volumes about their confidence in TSMC's operational excellence and its strategic position. Okay, interesting perspective from the analysts. Now let's widen the lens one more time. What about the broader market? News headlines, social media buzz, trader activity.
Right, the general sentiment pulse. This section gives an illustrative snapshot, again as of September 3, 2025.
And the picture here sounds, well, pretty mixed.
Yeah, mixed is a good word. News sentiment gets rated average 3 stars. On one hand, you see lots of positive coverage calling TSMC the, quote, backbone of the AI industry. Very powerful narrative.
Can't argue with that.
No. But then you have these significant negative themes constantly bubbling up. Geopolitical risks, especially around Taiwan.
The China situation,
Right? And also new U.S. restrictions on selling chip-making tools for use in China. The report highlights this as a major factor creating uncertainty.
So a push and pull in the news flow. What about general investors? It's also divided. 3 stars, average. You've got the bulls, really hyped on the AI story. The report mentions some chatter about $300 by October 2025.
Ambitious.
Very. But then you have the bears, really focused on those geopolitical risks and worrying about valuations maybe getting stretched.
So a real split there. And traders, people actively betting in the market.
They seem to lean more bearish, actually. That section gets a 2-star rating.
Why is that?
The options market data cited shows a put-call open interest ratio of 1.49 and a volume ratio of 1.86.
Meaning?
Basically, more open bets and more recent trading volume in puts, which typically bet on a price fall, compared to calls, which bet on a price rise. It suggests more traders are hedging against or directly betting on a price decline. Short interest is described as moderate, though.
Okay, so the people putting money down in the short term are showing some caution.
Seems that way. So overall, this broader market and news sentiment section gets a ER average neutral with a score of 2.96.
Interesting how that contrasts with the strong fundamentals and analyst views.
It really highlights that connection, doesn't it? While TSMC's fundamental role in AI is undeniable, widely recognized,
Yeah.
these geopolitical concerns, particularly China-Taiwan, they create this persistent overhang, like a cloud of uncertainty that just sits there.
And that's reflected in the trading.
Exactly.
Yeah.
You see the caution reflected in trader sentiment, even while the long-term business outlook seems incredibly strong. For you, the listener, it just underscores how even the absolute strongest companies can be influenced by these big external global events. It's that complex dance between stellar company performance and the messy world of politics and market speculation. No company, especially one this important, exists in a vacuum.
Right. So we've covered a lot of ground. Growth, profitability, financial strength, analyst views, market buzz. Looked at TSMC from, well, pretty much every angle using this report.
We have.
So let's try and bring it all together. When you combine those core fundamental elements, the growth, the profits, the financial health, what's the final verdict from this analysis?
Okay, the bottom line.
Yeah, the overall fundamental score.
The report calculates a final overall company fundamental numerical score of 4.56.
4.56, and that translates
So
to
that earns TSMC an outstanding top-tier own rating. Excellent.
5 stars overall for fundamentals.
Yes. From that purely fundamental perspective, this deep dive really confirms TSMC stands out. It's an excellent company. Its position in the global economy is almost unparalleled.
Yeah.
It's driven by that super strong growth in advanced chips for AI, for high-performance computing things the world desperately needs more of.
Right.
And that growth is incredibly profitable. World-class margins showing real pricing power, that wide economic moat we talked about.
And backed by that fortress balance sheet.
Exactly. Impeccable financial strength, conservative structure, tons of liquidity.
Mm.
It lets them navigate this really capital-intensive industry almost easily.
So fundamentally just stellar.
Fundamentally, yes.
Mm.
Now, we absolutely have to acknowledge, as we discussed, that the market sentiment, even analyst sentiment to a degree, reflects those undeniable geopolitical risks.
Can't ignore them.
Cannot ignore them. But the core business fundamentals, growth, profitability, financial health, they are truly of the highest caliber, a really formidable foundation.
Yeah.
And for you, listening, this isn't just about spreadsheets and ratios. It's about
Mm.
understanding the core resilience, the strategic, frankly, irreplaceable importance of a company that is quite literally building the future of technology globally.
What an incredible deep dive. TSMC, really a company with just immense internal strength, facing some pretty unique and significant external challenges. It's a fascinating case study.
It really is. And maybe the question for you as we wrap this up is something to think about. How much do those external factors, the geopolitics, ultimately weigh on a company that is so strong internally?
Right. How does that balance play out?
Yeah. And as demand for advanced computing just keeps exploding, how might TSMC's strategic position change? Or maybe solidify even more despite the complexities? What does the whole future of, global manufacturing even look like when you view it through the lens of a company like TSMC?
Lots to think about there. Well, thank you for joining us on this deep dive. Keep asking those questions, keep exploring, and keep learning.